What surprised me is that the bubble has gone so big without any adverse consequences. In fact, one of the questions that Powell got, was, does the amount of debt impact your decisions on raising rates? Which of course it does, but he lied and said, oh, no, we're nowhere near there. I mean, we don't even consider how much debt the U.S. government has. We raise rates to whatever level we think is appropriate. We're not in a position yet where the government has so much debt that interest rates are a significant factor. Well, it's a very significant factor. We're already spending, $1.2 trillion a year on interest payments on the debt. A year from now, it'll probably be $2 trillion a year. And, if the Fed had to raise interest rates much higher, it could be $3 or $4 trillion. I mean, those are sums that are impossible for the government to collect. And so obviously the Fed is cognizant of that. But I'm surprised that, from the launching of QE1, when they first launched it, they didn't call it QE1 because they all assumed it was going to be one and done. I was one of the few people that said, no, this is the beginning of a process that will never end. But we've now added $30 trillion of debt and everything seems to be okay. I mean, the dollar is relatively strong against other currencies. I mean, it's not absolutely strong in that, prices have gone up a lot. So the purchasing power of the dollar has gone down. But relative to the euro or the Japanese yen or other currencies, the dollar's doing pretty well. And interest rates are still relatively low. The government is paying 4.5% on a 30-year treasury. That seems ridiculously low given the enormity of the debt and the probability that it's going to get inflated away. So yeah, the bubble has gone on for a lot longer than I thought, but the process of sustaining that bubble has done a lot of damage to the underlying economy because for the average American, life is getting worse, not better, as a result of all this debt and inflation. And the public doesn't buy all the rosy data coming out of Wall Street and the administration that the economy is great, it's growing, unemployment is low. People are struggling. They've been struggling for, over 10 years, 12 years in this inflation economy. They're working harder and harder and having less to show for it. People now have 2 or 3 jobs when they used to have 1. They have no more savings. They have record amounts of debt. They're paying record high interest rates on that debt on their credit card. And so they're desperate for the situation to change. But unfortunately, none of the candidates, and I think Trump would be included, have the guts to actually do what's needed. I mean, even though Trump has now got himself surrounded by Elon Musk, who's like a newfound Ayn Rand, libertarian, free market guy, posting stuff from Milton Friedman, I don't see a huge transformation. I think Trump said what he needed to say to get elected. I think he said a lot of things that appeal to the libertarian community, to the crypto community. He said a lot of things that he probably doesn't mean because he wanted donations and he wanted votes. But I don't think that, we have a real mandate for legitimate reform like they have down in Argentina. I just think Trump's going to try to blow more air into the bubble. Whether he succeeds in making it bigger or it blows up in his face, we'll see. Modern monetary theorists, whatever they want to call that, that nonsense. What they overlook is that government is a burden on the economy. You can argue whether the burden is necessary or unnecessary, but government needs to be paid for by the people, right? There's no other source of it because government itself isn't productive. It saps the productivity of the private sector to cover its operating costs. And so you measure the cost of government by what it spends, not what it collects in taxes. And so if there's a difference between what the government spends and what it collects, which in the United States, there's a multi-trillion-dollar difference every year, the public has to pay for that one way or another. We don't get all this government for free. And if we just print the money to cover the deficit, that doesn't mean, it's a freebie. What happens is the value of all the money that already exists goes down, prices go up, and those additional prices, those price hikes, that's how we pay for the bigger government. We pay for it through inflation and a reduction in the value of our money. So if we're just going to keep on printing money to pay for government, we're going to keep on paying higher prices for everything we want to buy. And so when people now have to have 2 or 3 jobs, the reason they need all these jobs is because they have to pay for the government. They're working for the government now, not for themselves, right? They're working to cover all these deficits. That's what's going on. I think we're going to continue to get weaker economic data, like all the data we got today was extremely weak, from the ADP numbers to the ISM numbers, factory orders. I mean, I think we're going to keep getting more downward revisions to a lot of the numbers. We've gotten multiple downward revisions now to the non-farm payroll numbers over the past year and a half. I think it's very possible that we've been in a recession for most of 2024. And I think that will continue into 2025. And so as the data gets stronger to support that, the Fed is going to try to continue with its rate cuts. But I am expecting a return to quantitative easing. They can't do that unless they go to zero first, that somehow they can't launch quantitative easing unless they have a zero bound. But it's my bet that if that's what the rule is, they're going to violate that. Because I don't think they're going to be able to get back down to zero, but I do think they're going to restart the QE engine, because I think that they've already lost control of the long end of the bond market. Is one of the forecasts that I made that I got right recently. I was saying that when the Fed cuts rates, that was going to be the bottom of the long-term rates and that they would go up. And that's exactly what they've done ever since the Fed cut rates. Long-term rates have gone the other way. And I think that's going to continue. And that's going to be very problematic for the Fed, because it's going to be harmful to the economy, to the housing market. And when we're in a recession, or when the recession gets worse, I think the Fed is going to be pressured to try to lower long-term rates. And the only way it would be able to do that is by buying the long-term bonds. And the only way to get the money to do that is to print it. So I think we're going to have a resurgence of inflation. We're going to have a weaker economy, stagflation. That's the one thing that, of course, the Fed has no plan for. I thought it was, almost humorous. And even it got a laugh out of Powell. A reporter asked him at the last press conference, "What's your plan for stagflation?" And he laughed and said, "Our plan for stagflation is that we're not going to have it." And so they're just hoping that there is no stagflation, but that's unfortunately where we're going. It's still going to be a great year for gold, even if it's not the best since 1979. But, gold has had a great century, millennia. I mean, nobody really talks about it. But since the beginning of this century, gold has beaten the S&P. It's beaten the Dow. It's even beaten the NASDAQ. In fact, if you go to the bottom of gold in 1999, that was the bottom of the bear market that went from 1980 to 1999, about a 20-year bear market in gold. Since that low in 1999, it's outperformed the U.S. stock market. So you wouldn't know that from the way the pundits talk about gold in the market. And I expect that trend to not only continue, but to accelerate. I still think that U.S. stocks are very expensive historically relative to their earnings. And I think the earnings are going to come under a lot of pressure in the adverse economic environment that I think is coming. And so I think you're going to continue to see U.S. stocks lose value priced in gold, though they may continue to gain value priced in dollars. I mean, because the dollar can lose a lot more value than stocks. At least companies are real businesses. The dollar is just a piece of paper. We created out of thin air. And so I think people should own gold as an alternative to the dollar or the euro or the yen or any of these fiat currencies that I think are being debased. It's not an investment per se. It's not a productive asset. It's a commodity. And so you can hold it as a store of value. Gold is unique among commodities in that it doesn't tarnish or decay, so you don't have to worry about it losing its value. I think what's really happened recently, you had two things. You had the introduction of the ETFs and Wall Street coming in and buying up Bitcoin. That pushed up the price. I mean, obviously, nobody is buying Bitcoin in an ETF because they want to use it for anything. No, they're not using it as a currency. They're just gambling on appreciation. And I think that kind of started to wear off. And then, of course, you have MicroStrategy, Michael Saylor single-handedly. I think he's bought in the last month 11.5 billion more of Bitcoin, a lot of it with borrowed money. But the rest of the money he raises just by, selling shares of stock. So he's just been this crazed buyer that not only has pushed up the price, but has caused a lot of other people to buy it to front run his buying, to try to, make money off of the buying. And now you have, Senator Loomis introduced this ridiculous bill to create a strategic Bitcoin reserve, which there's nothing strategic about Bitcoin, and we certainly don't need to have a reserve of it. But I think that the potential for this, and you had all these guys down at the Bitcoin conference in Nashville, RFK Jr. and Trump, paying homage to the Bitcoin crowd, really pandering to that community, promising them this Bitcoin reserve, which is really a payback for their donations and their support. But I think that the prospect of the U.S. government buying, 1 million Bitcoin, regardless of the price, just buying every single month and never selling. The Loomis bill says you can't sell that Bitcoin for 20 years. I mean, what kind of reserve is it if you can't use it? But, with all this stuff happening, I mean, that's really what's pushed up the price of Bitcoin. But I still think it's a bubble. I still think it's not digital gold. I mean, Powell got that wrong. He was asked about about Bitcoin. And he said he doesn't see it as a competition to the dollar. He doesn't see it as a currency. He said it's just like gold, which it's nothing like gold. So he doesn't understand gold either. That's another thing Powell doesn't get. Yes, a lot of people made money on Bitcoin, but I do think it's going to collapse. They like to compare Bitcoin to the internet and the beginning of the internet. Well, Bitcoin came around in 2009, 2010. So in the first 14 or 15 years of the internet, I noticed a very big difference in my daily life. I went from never using the internet to constantly using the internet. In fact, today, I can't even be without the internet. Everybody, I'm on my smartphone all the time. The internet is probably the most important thing in my life, as far as something that I use. In contrast, Bitcoin has been around for those 15 years and it hasn't changed a thing. I mean, other than the fact that some people have gotten rich because they bought it a long time ago, and other than the fact that if I turn on CNBC, all I see is Bitcoin commercials and people talking about Bitcoin. As far as in the real world, it's done nothing. Blockchain has changed nothing because of Bitcoin. So I don't see the value. Michael Saylor, I see his interview, goes, it's the only asset in the history of the world that has limited supply. No, has he not noticed that there are hundreds, thousands of other cryptocurrencies? Many of them have supply caps exactly like Bitcoin. And there's an unlimited number of cryptos that somebody can create. You can create one, I can create one, and we can limit the supply to whatever we want. The key is not limiting the supply. The key is the utility of the asset that you're limiting the supply of. Gold is the most useful metal in the world. But my belief is the main reason that all of this capital has been wasted and misdirected into Bitcoin is based on the belief that the price is always going to go up. That's the whole basis of the MicroStrategy strategy of continuously buying higher and higher cost Bitcoin with more and more borrowed money, because it's never going to come down. Because if Bitcoin goes down, MicroStrategy is bankrupt, right? I mean, where have I heard something crazy like that? I make payments all the time, very quickly, with my credit cards. I've used Zelle, I use PayPal, I use Venmo. We have all kinds of ways that I can send money instantly anywhere I want, costs nothing. I don't see where I need Bitcoin to do any of that. Nobody uses Bitcoin for that. They've already admitted that it's not good as a medium of exchange. Nobody even pretends that anymore.